Ladies and gentlemen, we need to talk about what is happening in the markets right now. This week, the markets had a courageous comeback, and many people were thinking that maybe last week was a bottom and we are on the way to all-time highs. But people, what could actually be happening is we could be about to face a new crisis that could be even worse than a stock market crash. So what could this crisis be, everyone? Was that the bottom? And what can we do to protect ourselves against this possible crisis that could be coming? Well, everyone, this is exactly what we're going to go over in today's video. It is going to be a good one, action-packed with information and data. So you're definitely not going to want to miss this. So let's not waste any time. Let's get straight into it. Okay, so first things first, let's talk about what happened in the markets this week. Obviously, it was a great week for the markets. The Dow Jones had a 5.3% recovery. The S&P bounced back 6.2%. And the Nasdaq, after it entered in a bear market, obviously the plunge protection team came in to save the day, and that's had an 8.5% rally. Now, there was a huge pivot and there was a huge shift in the market that happened around one event. What was that event, everyone? The Federal Reserve's latest meeting and their announcement to start lifting interest rates. Now, normally what most people that don't really understand how the stock market works is they would think when the Federal Reserve starts lifting interest rates, that's when the stock market would start selling off. But no, the stock market actually works in advance. So what happens with the stock market is they try to price in events anywhere between 6 and 12 months ahead. So when the Federal Reserve came out in December and told them they were going to start lifting interest rates, that is when the stock market started to sell off, and that's where we saw this 15% decline in the S&P 500 and the 20% decline in the Nasdaq. So these first 5 to 6 Federal Reserve rate hikes have already been priced in. Now the markets are looking past these rate hikes, and they're hoping that this will be the only rate hikes that the Federal Reserve does. And I think what the markets are starting to see is what I'm seeing right now. And they're starting to see what could be the next crisis that could be coming that will be even worse, like I said, than a stock market crash. Because it's become quite clear that the Federal Reserve is not going to stop inflation. They've already arrived to the party 1 year too late, letting inflation get to a 40-year high, absolutely destroying people's purchasing power and the standard of living for most Americans. Gas prices are rising, food costs are skyrocketing, rent costs are skyrocketing. Utilities are going up, insurance is going up, property taxes. The standard of living that most average Americans and Australians as well is declining rapidly. And newsflash, everybody, these 7 rate hikes that the Federal Reserve announced they're going to do to stop inflation is not going to stop inflation at all. Think of it like this. If you've got a bank account and the bank says, look, we'll give you 3% interest on your money, but inflation is 9 to 10% in real terms, and even I'll get into later in the video why it's even hitting 16% in real terms in some scenarios. What are you going to do? Are you going to leave your money in the account? Are you going to leave your money in the bank and lose purchasing power every day? Or are you going to be forced, Tina, there is no alternative, there is no other way but invest your money in the markets? Of course, you're going to pick the latter, everyone, and this is exactly what the Federal Reserve wants. So what is this scenario that we are facing now, everyone? We are facing the possibility of a market melt up or a market crash up. Now, for those not familiar with economic terms, this is where the market skyrockets, not because of fundamentals and companies making huge more earnings, is because inflation gets out of control from all the reckless monetary policy. Okay, now while we're on the topic on inflation, you're probably wanting to know is, okay, what is a way you can protect your wealth against the inflation crisis that is coming? And what you're also probably wanting to know is, what is the 1% doing to protect themselves against the inflation crisis? And what asset classes has the potential to outpace the S&P 500? Well, people, I've found that asset class. And this asset class has outpaced the S&P 500 by 164% between 1995 and 2021. And that is contemporary art. Now, unfortunately, this asset class has only been available to the ultra wealthy billionaires and the 1%, because us Joe and Janes can't afford to pay millions and millions of dollars for pieces of art. But this is where today's video sponsor comes in, Masterworks. Masterworks has found a great new innovative way for small retail investors to start investing in art. And they're taking billionaire investors head on. Simply put, you can now invest in the same art they do. Names like Banksy, Monet, Banksia, and other iconic name and artists for just a fraction of the price that they pay. Now again, another hurdle for retail investors, and myself included, to investing in art is what art pieces are going to appreciate the most. How do I know if this art piece is real? And how do you even go and get these art pieces and store them safely? Well, Masterworks definitely know what they're doing here. When it comes to selling art, they've returned 32% to investors in 2020 and 31% in 2021. Okay, now you probably want to know, how do I get started? Well, it's quite simple and super easy. Just a few clicks, you visit their website, create an account, browse their artwork, and you can diversify your portfolio with one of the most suitable assets around. Now, it's also been another issue, but Masterworks has solved with innovation, is liquidity in the contemporary art market. For example, if you don't want to wait for Masterworks to sell their art, you can sell your shares or those fractional shares of that art piece on their secondary market. Just like how you'd trade stocks on a traditional stock brokerage app like Robinhood. Now, again, with the stock market valuations being so high, investors not being sure of how great returns are going to be in the stock market going ahead, investing in contemporary art gives you another great way to diversify in an uncorrelated asset class. Now, if you're wanting to gain priority access and avoid the wait list, you can use my link in the description. It really helps out the channel. So thanks again for Masterworks for sponsoring this video. Now, back into the content. Okay, now the best way for us to try to predict what may happen in the future is to learn from history. And what I've learned from history is we normally don't learn from history. Once one generation passes away, we tend to forget about it. And, that's just ancient history and it'll never happen again. But let's have a look at what's happened to some other countries that are experiencing extremely high inflation right now and what happened to their stock market. Here's just a few lists, everyone. Iran is experiencing 51% inflation. Argentina, 54%. Zimbabwe, we've all seen the $100 trillion Zimbabwe notes. And Venezuela, this is just absolutely crazy, 200,000% annual inflation. So let me show you exactly what happens in a melt-up scenario. Well, look at this, everyone. This is Zimbabwe's stock market. And as you can see, yes, their stock market is going parabolic, but what is their standard of living? Last time I checked, their standard of living is going down and down every year. The economy has completely collapsed. The currency has collapsed. So you can't just look at the stock market this week and go, look, the stock market's up. So everything's all hunky-dory. Everything's fine. We're going to the moon. There's no issues here. Well, people, I don't think the average American thinks this, and what they're doing is showing proof of that. Look at this. Costco has run out of emergency food kits. So the average American is seeing the writing on the wall, and we're already starting to see bread lines again, like in the Great Depression, or what we call now food lines, where people are waiting in lines for hours at these food banks. And these are not homeless people. These are not people that have some issues. These are just average Americans that just simply can't afford these crazy costs of food right now, especially if they're on an average wage of $35,000 to $40,000. Again, look at Venezuela's stock market. It did very well, but we all know how things are going in Venezuela right now. Their economy is collapsing and the standard of living has collapsed. But I'm sure you want more proof and more data to prove this is the case. Same thing's happening with Argentina, everyone. Look at their stock market. It's going parabolic, but you ask the average Argentinian, their standard of living is going down, their purchasing power is going down. This does not mean the economy is going great if the markets are going up. These are some scenarios of what a melt-up looks like in real terms. Yes, the stock market may go up in dollar terms, but what might happen is the stock market may not keep up with the cost of living. For example, the stock market may go up 1,000%, but a loaf of bread may go up 2,000%, or gas may go up 2,000%, or real estate may go up 2,000%. Or what even is another scenario is, even if the stock market doesn't crash, but just stays flat this year, if inflation, real inflation is at 16%, you're losing 16% of your wealth every year in real terms to inflation. And people, I know you don't really believe the official CPI numbers, so let me show you some alternative CPI numbers that sound much more like reality. Look at this, everyone. This is Shadow Stats. Now, they record the way they used to record inflation in the 1980s. And as we can see here, based on the way they used to record the CPI in the 80s, inflation right now is 16%. But then they changed it away, they recorded it in the 90s, and look, it's off the charts here. Even the way they recorded it in the 90s, inflation is around 11 or 12% right now. I don't know about you, but that sounds much more realistic than the number of 7.9% they're telling us. But you know what they always say? Look, just take out housing, just take out food costs, just take out energy costs, just take out utilities, insurance. There's no inflation. They may say, look, these Apple EarPods, they've gone down in price and they're providing more value. So really what we're having is deflation. And I bring up a chart here, everyone, just to show you how much your purchasing power is being destroyed. Look at this. This is a dollar's worth purchasing power of the US dollar. Now we can see when the Federal Reserve was created in 1913, a dollar back then would be equivalent to $26 today and would get you 30 Hershey bars in 1913. And I definitely like my Hershey bars. And in 1929, a dollar will get you 10 rolls of toilet paper. In 1944, 20 bottles of Coca-Cola. And you can see here also on the chart historic events in 1970 when they removed the gold standard, and also in 2008 when they started quantitative easing, and also in 2020 when they printed and increased the dollar supply by a massive amount. It says here on the chart 20%, but it's much higher now, more like 60 and 80%. But of course, what are they telling us, everyone? They're saying again, they're still trying to say, well, don't worry, inflation is transitory. Well, people, what are we seeing? We're seeing the supply chains, they're not going to get fixed anytime soon because right now China is experiencing another outbreak of COVID and they're going back into hard lockdowns again. So this is going to put more pressure on supply chains. This is going to lead to more inflation. Also, what we have right now is war. And unfortunately with war, it leads to higher gas prices, it leads to more government spending, and it leads to higher inflation. So no, inflation isn't going to go down anytime soon. And even Janet Yellen has mentioned recently, we're going to have uncomfortable inflation throughout the rest of the year. So this leads me to the point of this video. If the Federal Reserve did what they needed to do and lifted interest rates up to 5 to 8% to get inflation under control, yes, we'd have a stock market crash, but the average American would experience a better quality of life because we would have deflation. That means prices would go down, people's purchasing power would increase, and then it'll give opportunities for other people that haven't been able to experience this crazy bull run to invest in the markets and maybe even finally be able to afford a home. But unfortunately, what I think is clear what's going to happen right now is the Federal Reserve is going to choose the latter. They're going to sacrifice the middle class, keep printing money, inflation is going to get worse, and we may see a stock market melt up, or we just may simply see the stock market stay stagnant this year, but people are going to lose purchasing power in real terms because inflation is going to erode away all their gains. But what you're probably wondering, what is the biggest risk of all that could lead us into a melt up and really destroy your purchasing power once and for all? Well, everyone, like I've been warning, what would accelerate this issue and what would make it a Venezuela-like moment would be the US losing world reserve currency status. Now, again, I've shown you the charts throughout history. Not one country has held world reserve currency status for more than 110 years, so the US is getting close to their due date to lose world reserve currency status. And what are we seeing around the world? We're seeing more and more of the East starting to rise. We're seeing more and more of the rise of China. We're seeing Saudi Arabia having talks with China to possibly sell oil in yuan. We're seeing more and more authoritarian and dictated leaders starting to rise up and cause more confrontation and more conflicts. And I'll show you another chart here. We can see the US dollar share of global reserves, percentage of allocation reserves quarterly, has fallen to a 25-year low. Saying the US is going to lose world reserve currency status this year, but it's looking like its days are very limited. And this is the reason why the US hasn't experienced crazy high inflation, because they've had the privilege of being able to print more and more dollars and not experience hyperinflation because the world has had demand for those dollars. But once that demand is gone, once that world reserve currency status is gone, like the Great Reset has warned that the US won't be the world superpower by 2030, that's when you'll see the real crisis begin. Now, I know what you're probably thinking, okay, well, what can we do to protect ourselves against this scenario? Well, what you're going to do, like I've been warning everyone, you're going to want real hard assets. For example, like gold, like I've said by our sponsor today, Masterworks, fine contemporary art. Even other collectible items are skyrocketing in value right now, and things like used cars. But there are other essential, real hard assets. For example, farmland. People are going to need food when we experience hyperinflation, and food is going to become a luxury. Also, like what we're seeing in Costco right now, Americans are waking up to the crisis that is coming. They're also waking up to the scenario that food costs are going to get higher and higher. So what I've been doing, and like I've been mentioning, you want to start storing some food storage to get ahead of this inflation curve that's going to be coming. And then just other good old-fashioned tools, gasoline, etc. These items will be very, very valuable during a currency collapse and a hyperinflationary time. So everyone, I hope this explains what's happening in the markets right now. The reason why I think the markets are starting to rise, because they're starting to think that this scenario of a melt up could become a possibility. Now, there's no guarantee that this could happen, and I hope that the Federal Reserve does eventually wake up to the fact of the scenario that we're in, but I do not have much faith right now. What they really need to do if they want to stop inflation is do 0.5 percentage point rate hikes or a full percentage rate hike right now. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.